Well, I think people have dampened their expectations for Bitcoin partly because Bitcoin has been treading water, and there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end, because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin.
As Bitcoin reclaims a key technical milestone, Wall Street strategist Tom Lee's bold outlook is reigniting debate over whether the crypto market is entering its next supercycle. Tom Lee, the renowned Wall Street strategist and co-founder of Fundstrat Global Advisors, continues to stand out for his optimistic yet data-driven outlook on Bitcoin and broader market cycles. His recent analysis highlights the concept of supercycles, powerful, long-term economic trends that shape markets for over a decade. According to Lee, we're currently in the midst of two such cycles: the rise of the millennial workforce and a global labor shortage fueling an AI-driven economic boom. While many draw comparisons to the dot-com bubble, Lee argues this time is fundamentally different. AI isn't just about connectivity, it's about functional intelligence that's reshaping productivity itself. From an analytical standpoint, Lee's perspective aligns with Bitcoin's current trajectory. As liquidity tightens due to government actions and institutional investors remain underexposed, market caution is high, a classic setup for upward surprises. With Bitcoin now trading around $106,500, having reclaimed its 50-week moving average, the asset may indeed be signaling a renewed bull cycle. If the Federal Reserve confirms an easing stance in the coming months, the environment could ignite fresh momentum not only in equities and AI-related sectors but also in crypto. Lee's projection of Bitcoin reaching $100,000 to $200,000 may seem bold, but in a market driven by structural shifts, it's far from implausible. In a market defined by rapid shifts and bold predictions, only time will tell if Tom Lee's vision of a Bitcoin supercycle comes true. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more market insights.
Well, I think what people have a hard time understanding and grasping are supercycles, because Fundstrat's work by nature is thematic. We look for story arcs that last 10 to 15 years. So the reason we turned structurally bullish in 2009, was because our cycle work showed that there was a long-term bull market starting. And beginning in 2018, we identified two future supercycles. One was millennials, and the fact that they're entering the prime age workforce. That was a powerful tailwind that would last up to 20 years. And the second was there was a global prime age workforce labor shortage. I know it sounds like plain vanilla to say that, but that was going to set the stage for an AI boom. So we're in the midst of an AI boom that is causing prices to levitate. But this is pretty textbook. In 1991 to 99, there was a labor shortage and tech boomed. 1948 to 67, there was a labor shortage and tech boomed. So tech is booming, and a lot of people look at stocks that have a high Sharpe ratio, right? They're just going up, and they assume it's a bubble. And so people have been chronically trying to short NVIDIA every step of the way up. And then the second thing people anchor to is that, well, many people aren't really that old in our business. I was actually an equity research analyst during the dot-com boom. So many people are saying this is just like the dot-com mania. There's some similarities, but we're so far from it. But everyone thinks that this is big again. I was actually helping doing the wireless sector. So they were part of that build out of the fiber and the cellular towers and the internet. I remembered that data networking analysts asked me, Tom, what is TCP IP? Because, wireless companies had to do some basic architecture. So this is very different because AI, of course, is gaining function. Internet wasn't gaining function. There was just a lot of spending. It's, well, number one, as your viewers know, people have gotten pretty bearish in the last couple of weeks because the government shutdown kind of has deprived the economy of money. And then the Treasury department isn't dispersing funds, so their liquidity has shrunk, and it's caused stocks to actually wobble. And every time the S&P is down 2 or 3%, or AI stocks are down 5, I think people get really cautious. I think, first of all, bullish sentiment is not even anchored properly. People become so hesitant. I think everybody thinks there's a top. Here's the thing: when everyone says there's a top, there cannot be a top. The top in the .com was because nobody thought stocks could ever fall. They actually thought we were entering like an era of continued prosperity. The second thing to keep in mind is that markets have been strong for the last 6 months. There is incredible demand for equities because people are really off sides. That's what you have to keep in mind. In April of this year, people thought we were facing Armageddon because of tariffs, and you had many economists proclaiming a recession, and that's how institutions traded. They were actually positioned for a massive bear. They can't fix that in 6 months. So we're now getting into year end where institutions, 80%, are trailing their benchmark this year. It's the worst performance for institutional fund managers in 30 years, and they have 10 weeks to fix it. They're going to be buying stocks. And finally, visibility for AI has not even been affected by the government shutdown or anything. So companies are going to start, as they think about 2026, start making announcements. So I think in the final months, I think one surprise is the AI trade's going to come back strong because it's wobbled. But the Fed is getting people scared because is the Fed going to suddenly hammer down on things? But keep in mind, inflation has been softening. So if they cut in December, they're confirming they're on an easing cycle. Now that meeting's not for a few weeks, but that would be really bullish for financials and small caps. And by the way, what's correlated to tech and financials and small caps? It's crypto. So I think you're going to have a massive crypto rally as well.
As Bitcoin weathers one of its most volatile stretches of the year, Fundstrat's Tom Lee is doubling down on his bold prediction that the world's largest cryptocurrency could still surge to new all-time highs before year-end. Fundstrat's Tom Lee remains one of the few Wall Street strategists unwavering in his bullish conviction on Bitcoin, even amid recent market turbulence. In a climate where many investors have scaled back their expectations, Lee's projection of Bitcoin reaching $150,000 to $200,000 by year-end stands out as both ambitious and analytically grounded. His argument centers on the view that Bitcoin remains underallocated, meaning institutional and retail portfolios still hold far less exposure to the asset than its long-term potential warrants. Despite a recent wave of profit-taking from early adopters, Lee sees this consolidation phase as a necessary reset before the next leg higher. From an analytical standpoint, his reasoning is compelling. As the Federal Reserve's quantitative tightening winds down and inflation continues to ease, liquidity conditions are likely to improve, historically a tailwind for risk assets like Bitcoin. Moreover, Lee's emphasis on the ISM index correlation, suggesting Bitcoin's strength aligns with broader economic expansion, adds macro depth to his outlook. While skeptics remain cautious after sharp liquidations, Lee's framework implies that Bitcoin's structural bull case remains intact. If his analysis proves right, the coming months could redefine expectations for both crypto and traditional markets. Let's get back to the interview.
Well, I think people have dampened their expectations for Bitcoin partly because Bitcoin's been treading water. And there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end, because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin. But stable coins and tokenized gold run on smart contract blockchains like Ethereum, and Wall Street is building, and Larry Fink wants to tokenize everything on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future is going up. So I think that there's a bigger move in Ethereum. And Mark Newton, our head of technical strategy, thinks we can be like 9 to 12,000 by January. I think that's about right. I think Ethereum just 3,600 more than doubles between now and year end, or between now and January. One thing you're pointing out, and that's correct, is that 2025 is the third year where the S&P will be up double digits, probably up 20% this year. So 3 years of 20% gains in a row. Okay, remember at the end of 2022, people were saying we were Armageddon. Nobody was bullish. So in the last 3 years, wealthy individuals and hedge funds recommended people go to cash, or they do alternatives like private equity, private credit, or venture. But the S&P 500 has trounced all of those categories of assets. So this is a comeuppance because, 3-year return, what is someone's excuse for basically maybe having flat performance or up 15% when the S&P is almost, up 200%? So this is really the reason 2026 is probably not as bearish as people think, because now next year, I think people are going to be like, wow, wait, NVIDIA and all these are public companies and their earnings are growing 50%. I think people are going to actually start chasing them next year. That's really positive for crypto because, as you know, there is also this argument today that the crypto cycle is a 4-year cycle, so it should be ending now. So people are trying to fade that. I think people are trying to fade everything, the S&P and the crypto, but forgetting that the Fed is beginning to cut. And the ISM, and we've written about this, is more correlated to Bitcoin than monetary policy. And until the ISM gets to 60, Bitcoin really can't peak. So I think this is pretty positive for crypto. But crypto, it's kind of been hurt because, monetary liquidity hasn't been really increasing. The Fed has been under QT, quantitative tightening. That's ending in December. And the Fed hasn't really given clear signals that they want to ease. So I think there's been a little bit of confusion for investors. I heard a Fed speaker last week say core services is inflating again. We checked it. That's dead wrong. PCE core services is now running at 3.2%. It's been long-term 3.6. It's actually running below average. And core services generally runs above 2% because goods offsets that. So I think that there's a false belief inflation is actually strengthening.
Bitcoin's current market dynamics indicate that the cryptocurrency could be positioned for a strong year-end performance. Despite recent volatility and profit-taking, the asset remains underallocated across institutional and retail portfolios, leaving significant room for inflows that could drive prices higher. Easing inflation and the nearing end of the Federal Reserve's quantitative tightening are improving liquidity conditions, historically a positive signal for risk assets like Bitcoin. Additionally, the correlation between Bitcoin and broader economic indicators, such as the ISM index, suggests its price movements are increasingly tied to macroeconomic strength rather than short-term speculation. For investors, the ongoing consolidation phase may represent a strategic entry point, providing an opportunity to align with structural bullish trends. If these conditions persist, Bitcoin's fundamentals and market positioning could support a meaningful rally into year-end, redefining expectations for both crypto and traditional markets. Given Bitcoin's underallocation and the potential impact of easing liquidity and macroeconomic strength, do you think it can realistically reach $150,000 to $200,000 by year-end? Bitcoin's consolidation could be setting the stage for a major rally. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more in-depth crypto market insights.